Hello again, everyone. This is Chris Thomas, one of the mortgage experts. In this video, we'll discuss what makes up your mortgage payment. How is my mortgage payment calculated? There are four basic components of the typical mortgage payment: principal, interest, taxes, insurance, and sometimes there are additional amounts that are due monthly, such as mortgage insurance, condo owner's insurance, sometimes referred to as an HO6 policy, and homeowners association fees. First, let's talk about principal and interest. Principal is the amount of money that you have borrowed. Interest is the money that is paid to the lender for the use of the money that you have borrowed. With a fully amortized fixed-rate loan, the amount of principal is very small and the interest is very large at the beginning of the loan term. The formula to figure out how much interest you're paying each month is pretty simple. It's the loan balance times the interest rate divided by 12. Here's an example of how much principal and interest you pay each month. Let's assume you have a $200,000 loan balance at 5% interest and it's a 30-year fixed-rate mortgage. The principal and interest payment will be $1,073.64 each month. Remember, the formula to get the interest is the loan balance times the interest rate divided by 12. So using the numbers in our example, we have $200,000 times 5% divided by 12, and that comes out to $833.33 in interest for the first month's payment. The amount that goes to the principal would be $1,073.64 minus the interest payment of $833.33, and only $240.31 would go towards the principal. Now let's talk about property taxes and insurance escrows. 1/12 of the annual property taxes and homeowners insurance is collected each month by the lender and held in an escrow account until it is due. When the taxes and insurance payments are due, the lender makes the payments. Even though the bill comes to the borrower, the lender will pay it. Conventional, meaning non-government loans, allow a borrower to avoid the escrow account and pay the taxes and insurance themselves, but lenders usually charge 0.25% of the loan amount at the closing for this privilege. This is known as an escrow waiver. If the loan is for more than 80% of the value of the house, the lender will require mortgage insurance. 1/12 of the annual mortgage insurance premium is collected by the lender each month as part of the mortgage payment. It's important to remember that VA loans do not have mortgage insurance, although conventional loans over 80% of the value and all FHA loans do have mortgage insurance. Another component of some mortgage payments is condo owners insurance. The homeowners association will have insurance coverage for the structure, but not for the contents of the condo. If the property is a condo or a townhouse, the lender may require the borrower to have condo insurance covering everything inside the unit. This is known as an HO6 insurance policy and is sometimes referred to as walls-in coverage because it insures everything inside the walls of the unit. It is similar to renter's insurance. Some lenders allow the borrower to pay for this insurance themselves, and some lenders require it to be escrowed, like the taxes. The insurance for the structure is included in the HOA fees. If the property on which there is a mortgage is part of a homeowners association or an HOA, the borrower will need to pay HOA fees. There is always an HOA with condos and townhouses, and sometimes for planned unit developments, otherwise known as PUDs. The HOA fees are not part of the mortgage payment, although they do have to be considered when the lender is qualifying the borrower for the loan. The borrower pays the HOA fees directly to the HOA management company outside of the mortgage payment. Here's a review of what makes up the monthly mortgage payment. There's principal on all mortgages, unless the loan is an interest-only mortgage, interest on all mortgages, taxes on all mortgages, except if the borrower pays the taxes themselves, homeowners insurance on all mortgages, except for condos, a very few townhouses, and when the borrower pays the insurance themselves, mortgage insurance if required by the lender, condo owner's insurance if required by the lender for condos and townhouses, and HOA fees on all condos, all townhouses, and some single-family residences that are part of planned unit developments. HOA fees are never paid with the mortgage payment. When you're looking for a mortgage, you need an expert. If you're a real estate agent and you've ever had a deal fall apart, it's time to start referring the mortgage experts to your clients. If you're a consumer looking to buy a house or refinance an existing mortgage, you need expert advice. Call us, Chris and Debbie Thomas, the mortgage experts, and you'll get the advice and the mortgage you deserve. If you'd like this tip, check out all the tips on our website. Tell everyone you know about the mortgage experts, and call us with any questions you might have.